All right. So category 4, I think is a very, very strict rule. Okay, because reportable events also need to report. Okay, that's very strict. So basically, if you got like acquisition, disposition, or change in proportion of the interest, as long as you got like a trigger, and I think you can sort of simplify the whole thing as crossing the 10% threshold. Okay, so basically all these rules hinge on crossing the 10% direct interest line. Okay, and also if there are huge changes, so if there are change more than 10%, so oh my gosh, all this 10%. Okay, so yeah, these two all hinge on these two. Okay, so for example, you didn't have a 10% of direct interest earlier, but then you know what? Boom, you enter into a deal, and then you now have more than 10% of the direct interest. Okay, that's category 4, reported event. You know what? This event is significant. Come on, you previously don't have, right now you have, and more than 10%. Okay, report it. Okay, and if you you compare to your last reporting events, you direct interest increased by 10% points. Okay, report. Okay, and of course that's acquisition point of view. What about disposition point of view? So basically you had like more than 10% of direct interest, but after a certain deal you don't have, or you have less than 10% of the direct interest. Then or if your like direct interest decreased by more than 10% since your last reporting event. So basically you got like a last reporting event and then now. Okay, so basically compare these two. As long as there's significant acquisition or disposition change, report. Okay, category 4. Okay, so and of course I think the other proportional change is also very important, because change in proportional interest also need to report. Okay, so basically acquisition disposition is about buy and sell. Okay, even without that buy and sell, if you direct proportional interest goes up or down by more than 10%. Okay, so basically if you think about this, if for example, okay, 4 people invest, all right, a certain partner will withdraw, right? So if withdraw, then come on, just the 3 people will own the whole partnership. That means, you know what, your proportion of that partnership goes up. Okay, so if there's another partner that joined the partnership, you know what, proportion goes down. So as long as your proportional interests go up and down, that even without buy and sell, come on, just another partner join and restore. Just you want literally doing nothing. Okay, but you know what, your direct proportional interest changes, go up or go down, but more than 10%, that's reportable. Okay, so yeah, you do please just pay attention. Come on, it's your partnership. Okay, just especially it's a foreign partnership, you need to pay special attention to that. All right, let me just give you some of the numbers in the scenario, so you have the direct understanding. So for example, you invest in partnership of 8% up to, I don't know, 12%. You know what? You buy more units, you earn more, you crossing 10% on the way up. Report, category 4. Okay, you cross the 10% direct interest threshold, reportable acquisition. Okay, that's the first one. Let's look at disposition. So for example, you got like 12%, you sell on the way down, like 12 to 8, crossing, you know what, 10%. Okay, you drop below the 10% direct, reportable disposition. Okay, really simple. Acquisition, disposition, crossing the 10%. Textbook version of category 4. Okay, and what about proportional interest without change? Okay, without the buy and sell, without a trade buy and sell trade. Okay, so for example, right, you own 12%, okay, and you own that passively. You don't really, you just as a partner, but you are the silent partner. You don't worry about everything, okay? So you just give the money and then you enjoy enjoy your life without worry about. But you know what? You can't just not worry about it in terms of tax, okay? So you can hire some professional to help me to do that, but you have to do that, okay? So for example, one of the partner exit, okay, withdraw, typical. Come on, they will say, oh, well, I'm done here, okay? They withdraw, and then you know what? Your share rises, okay? That rise is like a mechanical rise because if someone exits, then the rest of it will divide based on the original ownership, okay, original percentage, okay? So, for example, you rise to say 23. Okay, you passively say 12 and then 23. So that's a typical 11 or 12 to 23, 11, right? 11, you know what, more than 10%. That's just a tiny little bit more than 10%. Increase in direct proportional interest. You know what, boom, category 4, reportable events. Okay, so really simple. So my suggestion is that if you invest, especially invest abroad or have transaction with foreign entities, a foreign person, right? You should be extremely careful about that because RS got a very special set of rules for this kind of thing and may not be familiar to you. The biggest threat is the unknown because you don't know that this thing that you don't know. So you just ignore this because you don't know. Okay, so now you know because if you're dealing with the foreign income or transactions and all that, you need to be extremely careful about this. Okay, so yeah.